Thursday, let's take a look at some legacy charts for Brave New Coin. Starting off with the usual suspects, some correlations, and the VIX. The VIX has been important because historically, if VIX is rising, BTC and crypto in general is angry, mostly because a rising VIX is typically indicative of a risk-off environment, whereas crypto historically has represented a risk-on trade or risk-on condition. The VIX is still above 20, still near its Corona March breakout point. Anything lower or eventually lower should be bullish for crypto. Now, I don't think the VIX alone was part of anything that happened over the past week, but a good bottoming signal for risk-on trades would be if the VIX continues to decline. And something else that would be good to see is if we start inverse correlating with the DXY again, because the DXY looks like it's about to break 89 and stay below 89. And the inverse correlation with gold on the bottom here just continues, which is a bit baffling. But again, it's troubling if we're categorizing BTC as risk on and we are inversely correlating with a risk off instrument, gold. That doesn't bode well for BTC, at least in the near term. And again, what's troubling is these risk-on correlations with SPX and NDX, NASDAQ, because those charts look so overcooked still. I've been saying this for weeks and weeks and weeks. It just looks like a non-stop overbought situation. And if those pull back based on overbought conditions with a high correlation to BTC based on the risk-on hypothesis or scenario, then we're going to have some more pain here in crypto land for sure. This is the DXY chart. Last week, I think I was talking about a potential like inverted head and shoulders situation. Still remotely possible. It's not pretty. It's probably morphing into some sort of falling wedge at this point, but it doesn't look like it has any strength at all here, even though it looks oversold on the cloud. It's way below the mean, which is here in the red line. Now this mean is going to catch up with this Tenkan so long as price remains flat, and that would be the cloud telling you that we're trendless, much like it was up here. You overshoot all the means, eventually they catch up as price goes flat, and it's telling you to get out of the trade. So if you're bearish DXY, you probably want to see a little consolidation before the next move down, otherwise it's going to get too oversold. If you're bullish DXY, you want to see the means catch up with price and give you this cross telling you to get out of a short trade or think about getting into a long trade. But if we just look at this multi-year range between 2015 and to present, we're definitely at the bottom of that range, banging on that support. So it's hard to get too bullish when you see that on anything. Here's gold. It has pulled up above the cloud at this point. We're getting a bearish TK cross here, so the signals are kind of all over the place. I still expect gold to want to test support down here, somewhere near the 200-week EMA. Hasn't touched that level since 2018. Still looks like it's sloshing around though on trend, and if you're shorting this, you probably want to wait until it's back into the cloud to do so, to capture that edge-to-edge move there. This is gold on the daily though, and it looks pretty bullish in a vacuum. It's got a bullish cloud twist coming, a golden cross on the 50 and the 200. So this has all the trappings of a long re-entry signal on anything that I'd want to see based on technical analysis. So as odd as these signals look on the weekly, the daily looks great, honestly. That's exactly what you want to see when you are looking for a long re-entry signal. SPX, again, just as oversold as the DXY looks, the SPX looks extremely overbought. These MAs, or whatever you want to think of them as, the TK lines, will touch eventually so long as price does nothing and remains sideways, and that's your exit signal. Typically, the mean doesn't completely catch up with the Tenkan before some violent correction happens. And it's probably the most overbought it's ever been based on the March lows. So this is going to have a tough time determining the mean because it got so low so quickly and bounced so fast. So this is going to look extremely overbought in any scenario that looks like that. But to me, this is just saying it needs time for sure. NDX, same thing. probably the most overbought it's ever been on the weekly. And if this crosses, if you get a bearish decay cross up here, that's a gift. That's telling you, get out. Get out now. Typically these crosses on the weekly have been rather late. Cross here, cross here. Basically it's been the bottom, you know, in a bull market. These crosses are late because it stairs up, elevator down. So if you're gifted a cross while price is still at the top, you best believe in my trading dojo that's an exit signal on anything. Here's GME, which continues to hold at 171. What is going on? Bit bizarre that it's still up here. The short squeeze is long since passed, and I guess it's just consolidating. I don't know. Very weird to me that it's still there. AMC looks amazing. You had your Wyckoff accumulation, and now it's got an ascending triangle situation. So, you know, think what you want about AMC, but it looks like it wants higher highs here, at least by the end of the year. And the reason I'm looking at either of these charts is because they're a bellwether for retail shenanigans, at least have been relative to crypto, and represent the gambling environment, the risk on, I guess you could say. Coin, this is Coinbase. This chart just looks like it needs 6 months to a year to find itself. I don't know. I guess you could say there's some expanding, descending wedge. I don't even know. There's just so many gaps, so much crazy volatility intra-week. Based on volume, it wants 300, but it's probably just going to chop around for a long time before it actually figures itself out. And if anything, it's just, you know, it's in downward price discovery, right, at this point. Insiders are still probably selling. Insiders who wish they sold at 300 are getting nervous that it's going lower, so they're selling more. You know, whatever it is. People who bought at the IPO price or direct listing price are selling. It's a mess. It's just a mess. And if BTC can recover, that will probably save the coin chart. It's unlikely to me that coin's going to recover before BTC recovers. Coin was basically the top. The direct listing day was the all-time high price in BTC, so they seem to be pretty closely correlated. Here's MSTR, which continues to grind down despite Saylor buying more BTC, and it's got a nice 4-hour bull div growing now, but this doesn't look bullish in any regard. Trend-wise, to me, this is just done. Needs time, step away, come back in a few months, if not years. It just does not look pretty. There has been no semblance of bullishness since February. You know, it's failed at every higher high. Everything gets sold down. We're breaking lower lows. That is not a bull trend by any means. Here's Tesla, and a lot of other tech stocks look not great. Most of them are retesting the 200-day moving average. It's below the cloud. So it's definitely on the precipice of the most bearish it's been since the breakout in 2019. My guess is, with all of the newer people in stocks and the newly minted Tesla millionaires who are community members, true cultish type personality people, they're probably going to ride this down to wherever it's going to go, and that's fine, you know, diamond hands, hodl, whatever. But if you're trading trend metrics, you're definitely getting out, most likely, you know, or you're watching for double bottom, hoping that something can happen here. Otherwise, your long re-entry signal is above the cloud. So this doesn't look bullish to me. And the reason I'm looking at Tesla is because they have BTC in their treasury, at least to this point. We'll see what their next earnings call or whatever says. If they sold everything, if they bought more, if they bought ETH or Doge or whatever the heck Elon and company decides to do. But if they still hold BTC and BTC price turns around, Tesla should turn around with it. Square, same thing, at the 200-day moving average below the cloud. It looks like at this point the trend just needs a break. Again, it's bullish above the cloud, but right now it doesn't look bullish really in any regard. GBTC kind of mimics BTC, obviously. It's at the 200-day moving average, though. It is below the cloud. The cloud will flip bearish here in the next few trading days. It still has this RSI characteristic. We saw this in 2019 as well, where you get this rise in price with a rise in RSI. RSI starts to flatten and then declines. So it's definitely worth watching this trend going forward on RSI, especially on GBTC or CME BTC. The gap is actually widening though, the discount. It's only 9% today. It was 17 to 20 prior few days. So maybe that's a bottom signal. ETH is experiencing a growing discount. Maybe that's troubling for ETH. There's a lot of mysterious stuff here because they can't ever actually sell the ETH or the BTC that is in the trust. Will they convert to an ETF? What can they do to close the premium? Is converting to an ETF the only thing they can realistically do to close the premium if they're not just buying their own product, buybacks effectively? And then we look at stuff like this on LTC, still has this premium, likely because the people who got in can't sell yet. They have that 6 to 12 month window where they can sell. I forget what it is exactly for LTC, but BCH, probably the same thing. There's a reason these premiums exist, and there's a reason the premiums don't exist anymore on several of these other products. ETC being negative 35% is probably an issue for them. Yeah, so just be careful if you're actually trading this stuff. And knowing what you're trading is important, because they're still getting their 2 and 20 fees on something that's negative 35% below spot. Here's the CME futures contracts, and we've really been watching this since CME came out, because they tend to move the market pretty decently based on their cash-sized positions. And since 2020, there really hadn't been a contract that closed lower than it opened. We've had some price volatility in March, obviously, but really it's been up only, right, since then. And only now in May are we threatening a true down contract, so that this March 29th to September 24th contract may actually close lower than it opened, and is setting up for that. Now, obviously, we have a long ways to go to September 24th, but these intra-contract opens and closes can help guide us along with that, certainly. So this could be a really big next week for sentiment, because if this new November to May contract opens and immediately sells off, if we get lower lows below 30K, for instance, I don't expect to be bullish again until September. That would be my read on it. These contracts have really been straight up, straight down. All of these contracts have closed higher than they've opened. Even this Feb 1 to July 30th contract is threatening a lower close than open. So worth following this stuff. It's always worth following these rollover dates. Typically lots of volatility around those dates as well. And lastly, I'll just mention the ETH and BTC portfolios I trade for Enzyme.finance on Techemy, for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. You can deposit ETH or USDC into a smart contract, and it gives me the ability to use those funds to trade ETH or BTC in this case, as well as we have a managed DeFi portfolio, which has 15 to 20 DeFi projects in there. Both of these took a beating, the DeFi project more so than the ETH-BTC portfolio over the past week. But I'm buying the dip. You can see AUM allocations, trades down here. You can see what I did and when. All this is done through DEXs. So you don't pay the gas on any of these trades. You just pay for gas on the way in and on the way out. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.